The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good morning from TFNN. Welcome to the May 8th fantastic Friday edition of today's opening bell on the Trader's Edge. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there had a terrific Thursday. Let's make sure we do everything we can to have a fabulous, fantastic, wonderful weekend. Of course, how could we not? We got the Players' Championship going on up in Jacksonville, so that's a great tournament to catch. Of course, what I want you to know, folks, is I'm absolutely grateful for your presence here today. I'm here to serve you. So feel free to go ahead and pick up that phone, dial in at 877-927-6648. Of course, internationally, you can call to me at 727-445-1044. This is Fabulous Friday. Of course, it's Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we got Dow futures up 169 points, trading at 18,058. S&P futures up 20 points at 2104. NASDAQ futures up 44 points. They're trading out at 44.47. U.S. dollar index back 129 ticks, trading out at 94.61. We'll go take a look at the currency pairs. We'll look at the hard currency. That's Goldilocks and silver. You got gold up $8 at 11.90. Silver's up 13 cents. She's trading at 16.43. Light sweet crude up 90 cents right now, trading at 59.85. A quick peek across the globe out here. Let's go see what's going on over in Europa. Specifically, let's look at the FTSE. The FTSE up 145 points right now. The FTSE, again, is going to reject the top of the consolidation box. Here's the weekly chart for the FTSE. The top of the consolidation, when I mean consolidation, we're talking long-term consolidation because these are the highs from 1999 out there. That's the yellow line going across my screen. I got to go so far back in my charts. Holy Toledo, there you go. There's the yellow line out there. And what we can see, that's at that 69.50 level. Price, and the reason why we want to pay so close attention to this, well, hey, maybe just simply setting up as a great trade overseas, but you're talking about a consolidation of some 3,500 points. You're looking at about 3,500 to 69.50, so somewhere in that range. And what you and I know is that these patterns work the same. Pattern recognition, folks, it works the same. You break out of a consolidation, your projection is a measured move. It's equal to or greater than the consolidation. You can ignore it if you want. I'm not going to ignore it. You're not going to ignore it, but others are going to ignore it out there. Why? I don't know. But in this case here, we're seeing the FTSE, and as long as price stays above that level, the message is pretty clear, especially when you've come back and you've tested it. You come back, you test it, and you reject it. It's saying it really does want to break out. You bust back down to the other side. It says, okay, time out here. Right now, what we know about the FTSE, it's saying for a 1, 2, 3, 4, 5 weeks in a row, after first busting through it in the week that began March 16th, pulling back, and then 5 weeks in a row, the FTSE above that level. Now, it's not doing a whole heck of a lot, but it has doing one important thing as far as its indice is concerned, and that is breaking out of long-term consolidation, very much like our New York Stock Exchange out there. If we take a look at the DAX here, the DAX, has had a super ride to the upside. It's been taking a timeout. Its timeout so far, this is the weekly chart we can see, is basically, well, it's a 0.382 retracement if we just simply, on the daily chart, in essence, came off the December 15th low. But the reality is, that's really not where you would take a look at on a weekly chart what the DAX has done. So we're going to see that the DAX has not even made a 0.382 retracement. That's how strong it is so far. That does not mean that it will not make its way down to 10,839.18, the 0.382 retracement level. It, in fact, may. There is a bit of, and in fact, I would say on the weekly chart, odds would favor that that's what it would do out there. But let's take a look at the weekly chart for the DAX. Over in Asia last night, You had the Shanghai. How about that? The Shanghai that was up 98 points. That's over 2%. Hang Seng up 287 points. That was up 1%. The Nikkei up 0.5%. So you've got the DAX up 1.5. You've got the FTSE up 2. I'm going to say it's pretty hard today for the market to do a pop and a drop here. Pretty good chance that what happens today is that the market goes ahead and closes up at its session highs. Expect it to close if we don't see a drop. What my expectation would be that it would actually go ahead and close at its session highs, especially as the futures contract close, because what you're going to see is the sphincter muscle tighten up really bad on the shorts. Now, I'm not suggesting that that's really what you should do if you're short. It all depends on where your stops are, where you got in, what your outlook is. The market's really doing exactly what it should be doing. That's the thing that is so wild to me, is that, I've got a little triptych that I follow out here. Newsletter subscribers know it. We follow it. That way they can make a decision as to what they want to do out there. And it was very clear that the market was supposed to make a bottom yesterday, and then it was supposed to, was at least supposed to bounce. So when I say a bottom, I'm not talking like a long-term bottom out here. So the market, and what was really cool about yesterday was the mere fact when we took a look at those 2-hour charts out here, this is the NASDAQ, by the way, is that it was making all sorts of patterns that are bottoming or at least short-term low patterns. I mean, you'd have to just totally violate every principle that we have here to suggest otherwise. It was making a 1-to-1 A to B equals CD pattern to the downside. That's where we started from the highs out here back on, what was that, April 26th, April 27th? What was the date? April 27th out there. A nice 1-to-1 A to B equals CD. It was making a 100% move of a move by coming back to a set of swing points back here April the 19th. When a market makes 100% move of a move, it usually does something different. It was making 2 seventh wave stretch candles to the bottom seventh wave pattern, whether you started from the April 27th high or whether you started from the retracement high. It's not often that you see that. You see that and you're kind of like, really? Made a famous Rhodes price relative strength divergence pattern, came in with a bullish engulfing candle. So what? The market knew that that it was going to respond well to the jobs numbers out here. I guess it does. Market knows things in advance of us, but you and I, market's not the market gives you and I signals all the time out there. Now, as we take a look at this 120-minute chart out here, market is still in a decided downtrend. All right, it has not broken above the top of this descending price channel. I can show you 2 different price channels out here, just actually to make the point that stay within inside the time frame that you're actually trading as you're making your decisions. Now, if we see a break of this trend line out here, which is priced at, I don't know, right around the 44.63 level, give or take. If we see a break above that, that would signal to me that the market's going to go ahead and at least try to make a run for those April 27th highs again. If we don't, then, and in fact, this area holds, especially at least here being in a 4th wave on the way up. And, by the end of the day on a 2-hour chart, it could easily be back to that 7th inning stretch candle out here. It actually would signal to me, I wouldn't be surprised to see Monday the market sell off and then just simply continue this pattern where you've got something where all of a sudden the bears feel really great because the market's moving lower, and then only to have the rug pulled from underneath them, and then the bulls feel real good, only to have that rug pulled from underneath them as well out there. And that's the type of market that we're in. My suggestion, if you want to play along in this game, is go find the intraday price pattern, a time frame that the market is making, different types of patterns like this that you like to trade out there. As I mentioned, we could take a look at a couple of different trend lines. I'll take a look at the 300-minute trend line, the 5-hour energy drink sponsored by our man Saratoga Bob in the Tiger's Den out here. What we can see if we take a look at this channel line, you're going to have, because the opens and closes, we're using the body of the candle. The body of the candle is the essence of price out here. So what we know is that when we take a look at this 5-hour chart out here, nothing bearish about this. Price is broken through the top of its descending price channel, and that means where it's going to head to is the next descending price channel. When you take a look at trend lines, it works this way on trend lines. This is what always amazes me, and I had to learn this the hard way, so I'm just going to share this with you. When you draw a trend line, it doesn't matter to me which swing points you use. When you draw a trend line and you break through it to the upside or to the downside, let's say to the downside here, when you break a trend line, where are you going to fall to? If you're using trend lines, this is a clue. If you're using trend lines, where are you going to fall to? That's right, the next trend line that you see out there. So that's really how you want to use trend lines and channel lines and use multiple time frames out here. In this case, we've got a 300-minute, we've got a 120-minute chart out there. You know, it's like I used to say, I still say this, you know the expression, but I found out that people were using it the wrong way. So I said, oh, wait a minute here. I need to maybe reframe this a bit. And that is that in a hammer candle, which is a beautiful candle formation out there, if you see it close below a hammer candle, if you're long, that's right, you're long, you're wrong. Now, people would take that meaning and just think like the market or whatever it was that closed below the hammer candle that was going to fall apart. Wrong. What that means is a hammer candle is what? It's a level of support. And when you break one level of support, you're going to fall where? Exactly. The next level of support. So if we could just stay present with regard to channel lines, trend lines, candle meanings out there, and stay within the context of that, you're going to do just fine. So the 300-minute chart, we see a slight breakout. We see a test of this area. If, in fact, that area holds, then we're not going to see a pop and a drop out there. I can't guarantee you what the market's going to do here in 13 minutes. We're going to find out. So keep your seatbelts fastened. But if we go take a look at maybe some other precursors as to what's going on, you know, you and I, we'd still go at least take a look at the currency pair, Euro, Japanese yen, see what it's doing out here. This is the daily chart out here. So the Euro, Japanese yen, not doing a whole lot. It's certainly not trading to the downside. If this was going to truly be a pop and a drop, this would be tipping its cap. It is not tipping its cap to the downside out here. What are you going to watch for, at the end of today's close? Well, you're going to go take a look at that VIX index. Right now trading at 1513. I don't know what's going on in the futures contracts for the VIX. Well, they're all traded back. The most current contract out here, which is what, June? Is the May. May's contract is the most current active. That's off 78 cents this morning. Not so much the case as we go out, a year from now. But hey, let's just come back to what we're going to watch at the end of the day with regard to the closeout here. That's going to be the price point of 1427. VIX closed at 1513. Here's the deal. If you close above 1427 today, what the 50-day exponential average, what the 50-day line on the VIX index is telling you is what used to be resistance is now becoming support. And that says, okay, there's some more price damage, some more chop around here. You should expect a chop for at least the next 7 trading sessions. I think it's 7. I've got to go back and look at my math out there. But expect this chop. Expect this chop. If I set that expectation for you, it's going to be a whole heck of a lot easier for you to deal with these markets that are up couple of days and down a couple of days out there. What else are we going to be paying attention to? Well, you got to pay attention to the summation index for sure. Now, the Dow, which is going to stick its head above the zero line. We take a look at the price oscillator. That's clearly going to do that with the Dow being up, I don't know, 150, 160 points or so this morning. The question is going to be, can it maintain, can it stay above that level? And if it does, you know what it says? It says that the Dow at least probably gets into the 18,165-ish area. Maybe, in fact, it actually gets out there and finally tests the high of 18,288. Maybe it makes just a slightly higher high. This is Steve Rhodes with TFNN. We get back. Let's go take a look at Goldilocks. Let's take a look at Hi-Ho Silver and anything else that you like to. 877-927-6648. I'll be right back, folks. Do you know the 7 most critical factors that influence every decision you make, and how not knowing these will jeopardize the health, the wealth, and the relationships you deserve? I'm Steve Rhodes, morning host at TFNN.com, and for the last quarter of a century, I've studied and used the secrets of human growth, the same formulas used by leaders of nations, billionaires and millionaires, and the most successful athletes on the planet. Would you like to break through any obstacle that gets in between you and the success you deserve? Would you like to turn fear into strength? If you could find a way to achieve, be fulfilled, and live a life of meaning, wouldn't you want to know the answer? I'll teach you the factors that control your state of mind and the drivers that impact every thought, emotion, behavior, and action we take in my new webinar, The Psychology of Trading. Join me for this 2-part online event where I'll unveil the secrets to human pattern recognition, because they're not what you think. And soon, you'll have the health, the wealth, and the relationships you deserve. Just go to the homepage of TFNN.com and click on The Psychology of Trading to begin your journey now.
trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow futures up 168, S&P futures up 18.5. I mentioned we go take a look at gold, silver, currencies out here. Let's go take a look at gold right now. Trading up about $9 as we speak. Gold still trading inside that range where the closes are within about $20. Clearly a consolidating pattern that's out here. I mentioned inside the Tiger's Den, even though I did a quick segment, I think, with Tom. Tom yesterday, and we were taking a look at, I don't have the chart present right now. I probably can go ahead and pull it up for you. Let me do this here. Let me find it. My gold, where is it? Should be right here. My chart that shows gold and the GDX right next to it. Yesterday, here's the GDX chart, by the way. We took a look at the GDX yesterday, and what we noticed was this nice descending price channel that it had broken out of, and yesterday came back to test that level. And that's so whether it's diagonal, whether it's horizontal, channel lines, trend lines, and so forth, that's really what you want to see. And price came back. It held that. It's inside the TAS market profile box out there, the top of which is 2026. If I take a quick peek and see what the GDX is selling at right now in the pre-market, we said 2026 was the number, right? 1994. So it hasn't taken that out. But we take a look at these two. Did I do that? No, I didn't do that. Thank goodness. Okay. I've been accidentally hitting the wrong button here this morning. If we take a look at gold, here's the gold's channel line out here. We can see how these things, pretty much work in tandem. And so gold is now just trading above that channel line. But it's all these closes out here. What I said in the den here, so first, what I said yesterday was that maybe we're going to get a reading with regard to what gold wants to do based on the mere fact that the GDX rejected the top of that descending price channel. That may be the case. My real belief now, I've looked at a few charts. I wish my system allowed me to show gold priced in euros, and that I could make that switch over. I've been looking periodically at a gold chart priced in euros. I don't have a way to really post that in during the radio show, so I don't. But I believe, see, gold, if you take a look at gold is, we'll call it a fear trade of currency, right? And I know that gold is priced in dollars, but I think we're all looking in the wrong place, which is what I wrote inside the Tiger's Den this morning. With regard to the U.S. dollar index, which has been gaining strength out here, we're not really worried too much about. I don't think there's a whole lot of fear or discussion about the U.S. dollar index, right? There's more discussion about interest rates than there is anything else. But that's not the case over in Europe. If we take a look at the Great British Pound, what it did early this morning after Cameron's party, won the elections, and the volatility there with the stuff with the grease fire that might be out there, is the UK in? Are they out? So the fear with regard to currencies, I believe, is really overseas, over in Europe. So I really believe that the price chart, if you are a trader of gold, you need to be paying. I'm saying you need. You should pay attention. In fact, you should look for the patterns that are in the gold chart priced in euros in order to price gold. That is the best conclusion that I can come up with at this moment for you. With regard to silver, I don't think silver is necessarily the same, is not the same, but silver is going to go with gold. Sometimes maybe it'll go ahead of time just simply because it's less expensive out there, on the currency piece of it. Right now, silver's not doing a whole lot, just really trading sideways out here. Of course, I've got to go get the active contract is what I really need to do. That would be helpful, wouldn't it? Let's take a look at light sweet crude. In light sweet crude's case, what we know about it, it has been trading in a rising price channel. It's just slightly out of it right now. When I say slightly out of it, that's after making the 1 to 1.618 A to B equals CD pattern to the upside. It's after making that shooting star that we pointed out 2 days ago. Yesterday, a bearish engulfing candle. That's really the most bearish candlesticks that it has formed ever since coming off of the bottom here March 18th. And now you've got a break of the price channel. Today, you just simply are testing the price channel. You're testing the top of the resistance line inside of light sweet crude. This says to me that light sweet crude is more likely than not going to make a retracement down to 56.17 to 56.59 out here, unless it can get back inside that trend out there. At the end of the day, you will know. But that looks like what the move would be to me, the next move in light sweet crude. Currency-wise, let's go take a look at the euro versus the U.S. dollar index. You know about this price channel line that we've been looking at. This so far working really well. Let's pull this back out here. Let's get rid of the retracement levels. What we can see is this is truly the soup du jour of price channels out here, because this thing has been in place for a long time. This goes back nearly a year. You can see the top of it really taking place and beginning here in July of 2014. So, we've got 10 months out here. And right now, price came right up into the top of that yesterday. No bearish reversal candle or anything. Yeah, maybe a little dark cloud cover. That's about it right now. So no way to know if the euro hasn't cracked to the downside. And if it does break out to the upside and that starts moving higher, that's going to put some pressure on the U.S. dollar index. This is Steve Rhodes with TFNN. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're like me, you see the world's emerging nations as a very real opportunity, as these countries and their economies are developing right before our eyes. And you can rest assured that Everbank has spotted this opportunity too. In fact, they just recently unveiled the new 5-year market-safe Future Economies CD. This is a CD that could really deliver, but you have only until May 7th to take advantage. Consider the facts. If the Future Economies currencies beat the US dollar over the CD term, you'll get all of the upside. And should they lose? No worries. There's zero downside risk here, as you'll still get back 100% of your deposited principal. Intrigued yet? The May 7th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is an equal housing lender and member FDIC.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar is ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick for tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're off to the races. We got the Dow up 200 points, trading at 18,125. S&P up 20 at 2108. Composite up 52 points at 49.97. Russell 2000 up 10 points this morning. She's trading at 12.36. DAX up 153. FTSE up 141. Gold's up 7. Silver's up 12 cents. Saudi light sweet crude is flat for the day. Lead the charge to the upside. It's Biogen. BIIB out in front at $10.17, up 2.5%. Just behind it is Tableau Software. That's up about 9.88. That's up nearly 10% as well. We've got Google up 7, Outer Wall up 6, Amazon up 5. To the downside, we've got Fluid Ijum. Something like that. FLDM is a ticker symbol. That's down 25% this morning, off $9. Monster Beverage down 7.50. That's off 5% or more. Medivation MDVN off 3.80. Let's see. Sprouts Farmers Market. I like Sprouts. That's to the downside. SFM is a ticker symbol, down 6% this morning. Chicago Bridge and Iron. CB&I been around forever. That's off a couple of bucks. Shake Shack down $3. Salesforce.com off a couple of bucks. 213. So the question is, I got a question here. It says, where would you sell? This is somebody who wants to sell the market. It says, where would you sell the market? All right, so I would first have to say you got to go down to a intraday chart out here. Well, first I would say, hey, we know that if we take a look at the 300-minute chart, I'll just do this, go through it step by step out here. All right, for those of you that want to sell, what do we know about the 300-minute chart? Price inside the 300-minute time frame is broken through a descending price channel. Unless price gets back there, you're not getting a confirming message. You're only getting a confirming message that price wants to move the upside. That's the message of the 5-hour chart. What's the? And we're looking at the NQ out here. If we take a look at what's the 2-hour chart said, right? The 5-hour chart says go look for the next channel line. Well, that's still a bit higher out here. That says that you may not really be able to get resistance until you're in the 44.65-ish type range out there. So that would be one spot to be able to take a look at. You're in your 4th wave out here. I'd say wait for resistance. There's no market profile box or anything like that. That's really your next resistance line that I can see out here. And take a look at that chart. Now we go to the 30-minute chart out here. We're going to see that it has gotten to that 7th wave candle out. Well, it's not just yet. It's close, but it is no cigar. It needs to get above this spike high. I don't know if we'll call it a spike high, just simply the high that was put out here, and that price is at 44.5275. So it needs to get just above that in order to get to that 7th wave candle out there. Now, we don't know if it's a 7th wave or if it is basically recycled, and that's what you would want to wait for as far as I am concerned. You either need to wait to see price get back inside the channel line on the 300-minute chart, or you've got to wait for this 30-minute time frame and the 120-minute time frame to line up and give you some resistance points out there. So that's how I would take a look at it. I would also say and caution you, and this is probably the chart that is as important as anything, it's going to be the 30-minute chart here for the ES Mini, for the S&P futures. It is likely or potentially going to form a 7th wave stretch candle out there. And if it does that, it then is going to maybe do it right around the 2109 level, 2109 and a quarter, I believe, but we'll call it 2109 to be fair. If that level fails to hold as resistance, its message is do not be short. You need to see the 2109 level fail in order, and that could be a great short. So you just have, but that is the line of demarcation. It's hidden out there. Very few people know about what exactly that is, how it works, and why Stevie is so certain about that price level. But that's the level that you want to be looking for, unless the market gives you some other piece of information. But you get above that, you're actually not looking for short trades. Now, if we take a quick peek and see what the summation index is showing us, its message, with the exception of the New York Stock Exchange. Let's take a look at the Dow here, right? The Dow, was really close to turning positive yesterday. So it's positive. It's above the zero line. If it stays that way through the end of the day, it's going to go ahead and, if it doesn't peter out right about here at the 18,205 level, you're at 18,142. Expect it to go make a run for the 18,288, 18,281 level. Maybe even just pierce it and make a slightly higher high. That's its message as of 9:39 a.m. We go take a look at the NASDAQ composite. NASDAQ composite out here yesterday was right on the brink of resistance. Well, shoot, today it just said the heck with you. It is above that resistance. Even on its daily chart right now, it is above the trend line of that resistance. I'm going to go ahead and I'll just move that there. You can see just slightly above that, but it gapped up into a resistance level. If it trades higher, which it looks like it is, that is bullish and says it wants to go make a run for its highs out there. So long as the oscillator can stay above zero, that would be its message. But it all depends upon what does that reading look like at 4 p.m., not what does it look like at 9:39 a.m. New York Stock Exchange bouncing off of that area that was the extreme oversold condition. We suggested to you that when the New York Stock Exchange gets down to that minus 200 area, that it bounces or forms a bottom. It was no different today and yesterday out there. These tools, these are patterns that just simply repeat and repeat and repeat out here, and that's why you and I, why we pay so close attention to them. Of course, it's going to be key. What's going to be additionally key with regard regard to today is going to be that VIX index. And right now, this thing has gapped down well below the 50-day exponential moving average. That number is at 1423. When you talk about liquidity gauges inside a market, it really boils down to two things that you and I have to follow. It's the VIX index with regard to its 50-day exponential moving average, and then secondly, it's what's going on inside the Euro-Japanese yen. When both of those things are set up for bullish formation, which in essence they are, the Euro-Japanese yen certainly isn't selling off right now. Its message is one of plenty of liquidity out there to go ahead and chase the market. So as far as what to look at, go be paying attention to those 30-minute charts. That's to answer this question, where would be a place to go short if you're an intraday trader? What I would do is I would wait for the I would wait for those seventh inning stretch candles to form. I would wait to see, and hopefully that forms on the ES Mini for you right around 2109. But if you see it take that level out, you know what, today is likely not your day out there. Have a question to go take a look at IBB, the biotech sector for the NASDAQ out here. Let's go take a look at it, see where it is trading. It has gapped up above an area that you didn't want to see it gap up into or above, and that's the swing point here from the trading day of March 26. That had 5.2 million shares. That swing point was tested yesterday with, are you kidding me? Holy cow. Unless they stop reporting volume for the IBB. So here's what we know about the IBB. March 26th is the swing point that is in question. 5.2 million shares. How about this? Son of a gun. So you want to talk about messages of the markets taking a look at swing points in volume. The IBB has a swing point on March 26, has 5.2 million shares. The low of that, which is 333.78, was tested on April 30th with 3.5 million shares. Couldn't bust it down. What's it going to do? Well, it's going to try to go bust it up. In this case, I take that back. Yesterday was not a test of that swing point. I was looking at the wrong line out. Well, I was looking at the wrong line out here. Yesterday had volume of 1.6 million shares. Anyways, to answer the question, where's the short on the IBB out here? I would say it's going to be 356.95. Right now, you just have price traveling with inside the market profile. It's actually established itself as a bullish-looking look. If there's going to be resistance inside the IBB, it probably the sellers are camped out around 357, 356.95 to about the 365.21 level, and that's what's going on inside of it. Let's take a look at some things here as well that are moving and grooving. We've covered currencies. We've covered the commodities. We've covered the markets, what to be looking for there. 2109 is a key level, and the ES Mini out here. Let's go take a look at some things moving to the downside. What the heck has happened here? The fluid is out of Fluidgm. Fluidigm. You figure out the name of that. Elect Steve McPhail as General Manager of Production. Who cares? He is the General Manager of Production. Let's take a look at their numbers. 26.7 million versus 25.7. So they beat the top line. They just slightly beat the bottom line. Unfortunately, they did that with a loss. 15.9 million versus 15.4. Let's go take a look and see what this thing is traveling down to. So gapping down, you have wide price spread, accelerated volume, moving into a swing point down here. Not even a breakout or anything, but back to the October 13, 2014 lows, right around the 2310 to 2171 level. And that is where this equity is headed to. Also to the downside, Monster Beverage having a monster day. Unfortunately, it's to the downside, out with numbers of 4.4 million in net income versus 95 million from last year. That is a monster miss on the bottom line. That's a monster miss, especially when they did it with increasing volume out there. I don't even know. Did they spend a lot of money on advertising or something? What did they do? Did they open up the door on the net income? You got to go read that MD&A to see that one, because that's a miss. That's a miss, especially when you've grown your revenues to 626 million versus 536 out there. That's a miss. That's a huge miss. In any event, what it has not done, luckily for it, is at all-time highs. It has not made a huge monster island reversal pattern. It was threatening to do that this morning as it had gapped down below those. It didn't gap down below low here of March 18th. That number was 133.92. But hey, there's no reason why I can't go ahead and gap below that on Monday. So Monster Beverage here, which is a I used to trade this and hold. This is one of my better performing stocks way back in the mid 2000 area. So very familiar with it. In any event, it's gapped down, but it's still holding. It's still holding that sign of that wide price spread, accelerated volume day, and that gap up out there. But this could be nasty if it does on Monday or whenever it might form an island reversal out there. That would be an interesting read. Taking a look at its MD&A out there. To the downside out here as well. We'll go take a look at some things moving to the upside, but to the downside, let's see what else we have percentage-wise. Pros Holdings, PRO is the ticker symbol out here. They're out with numbers 43.7 million versus 40 to the revenue side, and $14 million loss versus $8.5 million the year before. This thing here doesn't look like it's very liquid. In fact, so illiquid, 200,000 shares. Stevie's not even going to waste your time taking a look at it. Let's go back. Let's go take a look at the ES Mini on that 30-minute chart out here, and it's now in that potentially in that seventh wave fashion out here. The actual high that we have seen looks like it's going to be that 2109. That's your resistance level, 2109. Even Steven. Of course, that's pretty easy to do. It only works in quarters out here, but I like the even Steven piece of it. So you got 2109. This is the area where the back is, where the ES Mini's back is up against the wall. If it catapults that, expect it to continue moving higher throughout the day. In fact, expect the markets to close at their highs. But this is the area where if it's going to fail, maybe it's not here at the 9:46 to 10 a.m. session, but maybe the 10 to 10:30 session out there. I am not saying that's going to happen. I'm just simply responding to that request. If you were going to take a look at a short, where would you look at those changes in trend? And I've really given you all of those details out there. I think I have. With regard to other things that are moving, let's go take a look at what's moving to the upside. We've got Tableau Software. DATA is the ticker symbol. They posted a loss as well. I just see the earnings per share loss. I don't see the exact loss. Nonetheless, shareholders are digging that loss out there in Tableau Software. How about this? This thing is at all-time highs now, taking out its previous all-time high, I would think, which was back around, well, it won't be the previous, but a swing point from February 26, 2014. That only had 941,000 shares, and Tableau's managed to get above that already in 17 minutes of trading with 1.1 million shares out there. That is a big move inside of Tableau. Keep piling up those losses. Seems like that works for you. We don't need to look at, well, it got Biogen. That's up 950. What are we doing in Biogen? Not a whole lot. We won't spend any time there. Let's take a look at Outer Wall. OUTR is the ticker symbol, up 9.5%, up $6 out here. Let's go see what it is doing. It's moving. It's trying to go close a window. This thing has a sign of resistance, a supply line out here. That's at the price point which it's run into so far this morning. This had gapped down back on January 20th with 5.3 million shares. You're up today with 360,000 shares so far. 73.45 is a number that it needs to close above in order to go ahead and repair that window. If it can do that, volume or not, it'll go ahead and test the highs out there. Of course, I can't guarantee you that, but that's what it really should do. And that's a test of 77.94. OUTR being that ticker symbol. Also moving out here this morning, we've got Whirlpool. Let's go take a whirl. Let's go take a whirl. I don't even, I can't even come up with a good one there that quickly off the top of my head, but let's take it for a whirl. Whirlpool. What Whirlpool is doing is really the same thing that we just looked at. It's got a supply line where this had gapped down back on April 28th. It did it with give Whirlpool a spin. I like that. That is from our production guy. He is Johnny on the spot out there. He is quick to it. So we're going to go ahead and give Whirlpool a spin out here. Now that spin is going to take it right up to the Rinsa level, and that's going to be at 196.67. That's the area that it has to clear in order to go ahead and repair and close that window. Otherwise, that is its supply line because of that gap down on April the 28th. Right now, we got the Dow up 234, S&P's up 23, Composite up 53, Russell's up 11. We'll be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Do you know the 7 most critical factors that influence every decision you make, and how not knowing these will jeopardize the health, the wealth, and the relationships you deserve? I'm Steve Rhodes, morning host at TFNN.com, and for the last quarter of a century, I've studied and used the secrets of human growth, the same formulas used by leaders of nations, billionaires and millionaires, and the most successful athletes on the planet. Would you like to break through any obstacle that gets in between you and the success you deserve? Would you like to turn fear into strength? If you could find a way to achieve, be fulfilled, and live a life of meaning, wouldn't you want to know the answer? I'll teach you the factors that control your state of mind and the drivers that impact every thought, emotion, behavior, and action we take in my new webinar, The Psychology of Trading. Join me for this 2-part online event where I'll unveil the secrets to human pattern recognition, because they're not what you think. And soon, you'll have the health, the wealth, and the relationships you deserve. Just go to the homepage of TFNN.com and click on The Psychology of Trading to begin your journey now.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
The Bull Bear Binary Option Hour, sponsored by Nadex. Up next on TFNN.
Welcome back, folks. Dow's up 240 right now. S&P is up 24. Composites up 54 points. Russell's up 10. These are wonderful markets that we trade. It has something for the bulls. It has something for the bears. Just depends which day, which time frame it is that you are trading. It is it's what's referred to as a choppy market out there, but nice chop because it gives something for everyone. As long as you use as long as you've got a strategy, as long as you have a plan, as long as you use proper money management out there, and as long as you don't let the last move go ahead and sway you as to what the next move is going to do out there. And you just come back and you play it like you're playing an electronic game out there. Just pay attention to the patterns. What we did last night at the workshop, and that archive will be up on the members page here later this afternoon. We took a look at the human patterns, which is even more important. Because when you're trading these markets, it's really all about being able to trade your emotions out there, and being able to get a grip on that is just key in order to be successful at everything that it is that you want to accomplish in life. So for those of you, and everyone is, look, unless you're in the grave, you're always trying to attain more, whether it's to give more to others and provide them with tools, or whether it's just simply to be able to provide more for others. We're always trying to be able to generate more something. And this is a workshop. I've never done anything like this before at TFNN. So it's been a real privilege and honor to do that. You can gain access to it. Doesn't matter that you weren't there for it live. Just simply come on over to the home. You will be happy. You will be so happy that you do this, because I open your eyes to something that really has been in front of you all the time, but you just need somebody to really help navigate, just as I do each morning with you when we take a look at these markets. We navigate what are they doing and why. To me, with regard to these markets, it's pretty clear out here. When you take a look at that ES mini today, you see it close above 2109. It says, depending on the time frame that you're at, and if it closes above 2109 and it recycles above that G wave out here, expect the market to move and close at its session highs at the end of the day. So time will tell, but have a great weekend, a great Friday. I'll look forward to seeing you Monday morning. Stay tuned. The Nadex Bull Bear binary option hour is up next. Have a great weekend, folks. Take care.